Today is Ryan Robinson, works with Best Buy. He is the CFO of the United States, Senior Vice President of Finance and Treasurer. His responsibilities include planning, performance, management, development of Best Buy operations. He also manages the treasury functions for the global enterprise. He joined in 2002 and previously led the company's corporate development office. Prior to Best Buy, he spent 15 years at ARN Ampro, basically a private equity activities. He earned his bachelor's degree at Notre Dame in the Mendoza College of Business with a major in finance. He went on to get an MBA from Kellogg. Ryan and his wife, Kathy, have four children. 3 of them, five children. I've been corrected here. And 3 of them are right here at Notre Dame right now. Caitlin is a senior, Ryan is a sophomore, and Claire is a freshman. He's very active in youth activities, and as you might guess, he kind of follows college football. Okay, Ryan, thank you.
And as an officer of Best Buy, I'm thrilled to be here, and I look forward to this discussion. I look forward to your great questions about our company.
Ryan, would you turn your
I would. I have technology problems. So as I was talking to Dean Gallio and thinking about the things that would be most relevant for this discussion, we talked about some objectives. And most importantly, I wanted to help the students learn about what I think is a great company, what has made it successful, the key factual elements about the company, and the key business issues that the leaders of the company are facing and acting upon now. Also, on a more personal level, I wanted to help you guys as best I could about some of the big decisions you're going to be facing in your lives. I think you're going to be fortunate to have lots of options you'll be facing. So if possible, if there's things that I could help communicate about my life journey, about the things that I see in great companies to work with, or the way that people behave in those companies that help make them successful, I want to share that too, and I want to have a conversation about it. So those are the principal objectives. Within that, there are some key questions that I think you guys should be asking. And I'd very much like you to be an active part of this dialogue. I really would like it to be a dialogue. I think you'd get a lot more out of it. I know I will get a lot more out of it. So just to start with, to give you context about how I see Best Buy, about some of the things that have affected my life. As Dean Gallio mentioned, I'm an alumni of Notre Dame. I lived in Fisher Hall. I was an RA on the first floor. I lived in Notre Dame Apartments for a while. And when I was here, literally where we're sitting now was called Greenfield, because that's exactly what it was, Greenfield, very creatively named. After graduation, I went to Northwestern University, attended the Kellogg School of Business, lived in Chicago for a number of years. Shortly after graduating, I met the love of my life, Kathy, who is a wonderful complement to make up for the things that I don't have. She and I were very blessed with 5 kids, as Dean Gallio mentioned. Caitlin, Ryan, Claire, Molly, and Jack. Our first 4 kids are all close together in age. Molly's a freshman in high school now. Jack's in 2nd grade, so he's 7 years after the pack. I'm Midwestern by background. I grew up in a small town in Michigan. A lot of my friends that I grew up with are big Michigan fans, so tomorrow's a big day. After graduation, went to work in Chicago for 15 years, and for the last 8 years, my family and I have lived in Minnesota. Professionally, my background is in financial services. I started with what at the time was called LaSalle National Bank, which was about the 3rd largest bank in Chicago. It was owned by a large international bank called ABN AMRO. I started in commercial banking, which is principally lending to businesses. Started to do corporate finance work to help advise those companies on their capital structure and how to raise money, how to raise debt, how to raise equity. Through the mid-90s, the banking regulations changed and commercial banks were allowed to broaden their service offerings, enter into the investment banking services, and a number of large banks, including mine, acquired investment banks. My firm acquired 3 large investment banks, and I was part of the assimilation process. I eventually joined the investment banking teams and mergers and acquisitions advisory teams for that company. I worked with a number of retailers and established a lot of relationships in retail. Eventually, the last 2 years or so, I was with ABN AMRO. Myself and a partner started what we called ABN AMRO Private Equity North America, which was investing in the equity securities of non-public companies. Some venture capital investments for earlier stage technology companies, some more mature companies, roughly 40 companies, and was fortunate to go on the board of directors for about half a dozen of those companies. So I was with that firm for 15 years, and I had a great career and a great life experience. And one of the lessons that I learned in that is to align yourself with companies that are rapidly growing, that have a vision, that want to excel in what they're doing, because it'll provide you with a lot more personal opportunities in doing that. And that definitely was the case with the firm that I was with. In 2002, I got a call from a friend who previously was the CFO of Nordstrom. I had done some work with the Nordstrom family, helping them think through different growth options for that company. And he said, hey, I'm up here in Minnesota. I have this fantastic company, Best Buy. We're growing rapidly. We need to improve our infrastructure in some areas like treasury and tax and corporate development. And I know you have some skills and some background. Would you be interested in coming up and talking? And at the time, it was January, and I looked up Minnesota, and literally the 3rd largest city in the state at that time was a lake, because they were having ice fishing contests, and 10,000 people were out on this lake. And said, I appreciate it, but I'm gonna pass right now. They were persistent, and I came to know the company and understand what a great opportunity it would be for me personally, what a great opportunity it would be for my family, and joined that company in 2002. Initially, as treasurer, I had responsibility for the tax group, but honestly, I didn't have a lot of background in tax. I also had a team that did financial assessment of new business opportunities. So new products or services that we could sell at Best Buy. Did that for a few years. It became clear that we were starting to add more and more stores throughout the United States, and there was going to be a point where we saturated the U.S. market with stores. And we had, I think, so many good things to offer consumers. We wanted to continue to grow in new ways, and that required us to develop a corporate development capability. So that is strategic evaluation of new markets, mergers and acquisitions capabilities, structuring and executing joint ventures. And fortunately, in my professional background, I had experience in doing that, and I was with a company that very willingly provided opportunities to employees to help grow the company, and we set up a corporate development team. We were fortunate to do a number of things. One of the first things in 2002, I met a guy in Minnesota named Robert Stevens, who was the founder of a 20-person company called the Geek Squad. We acquired the Geek Squad for $3 million in the end of 2002, and today we have over 10,000 employees and over $2 billion in revenue under the Geek Squad brand. It's been a tremendous success story and part of strategic differentiation for our company. That corporate development team also was charged with new market assessment, international market development. We were asked to prioritize different countries to enter. We initially prioritized China, and with the team, all of us had never been to China. We spent most of 2005 meeting with over 15 different potential partners, eventually acquired the 3rd largest consumer electronics retailer in China, and very pleased to say that too is a multi-billion-dollar, very successful part of our business now. Along the way, we set up a small team we call Best Buy Capital that makes venture capital investments in young technology companies, some of which we sell. So for instance, when Netflix was a relatively new company, and we realized we could help Netflix generate a lot of subscribers by bundling the service with the DVD players we were selling, we made an investment in Netflix. We drove a lot of subscribers. The company went public. We made a lot of money on the stock, and we made a lot of money helping customers enjoy that service. So Best Buy Capital is an interesting small part of the business as well. About 3 years ago, I was asked to be Chief Financial Officer of the U.S., which is honestly very different from the type of work that I've been doing before. Previously, I was working what I would call more in the white space, in where our company wants to go. And being a Chief Financial Officer, there's a lot more day-to-day, month-to-month, quarter-to-quarter rigor and process about things that need to be done. But I have tremendously enjoyed it. I've been fascinated with the work. It includes things like deciding whether we should open new stores, which new stores, the processes that we use to evaluate that. What should we invest in advertising? We invest over $600 million a year in advertising, and what is our return in different forms of advertising? What should our store labor model be? We invest over $3 billion a year in employees in our stores to serve our customers. How should they be organized? How should they be compensated? What should we invest in training? What should we invest in incentive compensation? All these great operating decisions I've been very fortunate to participate in. The name of this speaker series is Boardroom Insights, and so I just wanted to connect that to some of the work that I do, which provides a perspective for me on the company. There are about a dozen officers at Best Buy that participate in our quarterly board meetings. I'm one of those officers. We also have committees of the board that address different things: compensation, governance, finance. One of those committees is called the Finance and Investment Policy Committee, and my team and I are the principal management representatives that set the agenda, provide the content, make sure that those decisions of the committee are done very efficiently. And part of my role has been we manage the U.S. business, and to give you some context, Best Buy is about a $50 billion enterprise. About 3/4 of the revenue is U.S.-based. About 95% of the operating income is U.S.-based. There are 5 principal officers that comprise what we call the U.S. leadership team. 2 co-presidents, Sherry Ballard and Mike Vitelli, our Chief Marketing Officer, Barry Judge, Tim Sheehan, our Chief Operating Officer, and myself. And we meet on a weekly basis. We're in constant dialogue about the issues facing the company, how we respond to competitors, how we prepare for the holidays. And so I feel very fortunate to have a perspective on the company and its history and its tremendous change over the last couple of years that hopefully is informative for you as well. So that's kind of the background, what I do, and a little bit about me personally. From here, as we get into Best Buy, what I'd like to do is make it as interactive as possible. For the last 4 years, I've been having a discussion like this at Columbia's Business School, and I have been tremendously impressed with the quality of interactions with the students, the insight and the questions that they ask. So I'm throwing out a little bit of a challenge. I absolutely believe that the caliber of people in this room can meet or exceed those Ivy League people, and that the University of Notre Dame and the caliber of students that we bring will have very insightful questions, and together it'll lead to great dialogue. So let's do that. Okay? So I'm going to start into talking a little bit more factually about Best Buy, and then let's just talk as we go, okay? So a little bit about the company. We operate roughly 1,200 stores in the United States. About 1,100 of those are what we would call big box stores. So they range in size from about 20,000 square feet to our largest stores are about 58,000 square feet. Our smaller revenue stores do maybe $10 million in revenue. Our biggest store in Adventura in South Florida does about $100 million in revenue in one store. And we're fortunate to have a team member, Daniel Boston from Adventura, here with us. About 100 of those stores, 100 of the Best Buy stores, are a very different format. We call them Best Buy Mobile. They are smaller square footage, maybe about 1,000 square feet, principally in regional, super regional malls, and they operate selling cell phones, much like a AT&T carrier store, but they're differentiated. We're the only place you can get all the major carriers, all the major handsets, and the accessories to go with them in an unbiased sales environment that really doesn't care whether you go with AT&T or Sprint or Verizon. We want you to pick out what's best for you and your needs. And so that concept has been tremendously successful. We're adding over 100 of those stores a year. Another part of our business is Magnolia Audio Video. In about 350 of our 1,100 big box stores, we have premium consumer electronics and stereo experiences. So that's the high-end part of the business. It doesn't work in all of our stores, but in markets that have unique customer needs, and principally more affluent, more discerning customers, we develop value propositions and experiences in stores to address those, and Magnolia has been an important and successful part of that. Pacific Sales is also a company that we acquired about 4 years ago. It's a West Coast-based premium appliance retailer. So Best Buy, through our Pacific Sales business, which operates about 35 stores, is the largest seller of high-end appliances in the world. So brands like KitchenAid, Sub-Zero, Viking are sold through those stores, and now we're experimenting with Pacific Sales stores within a store, as we call it. So Pacific Sales boutiques within Best Buy stores. And it's early days. We have 2 of those that we're experimenting with now, but they've been very successful. I mentioned an important strategic differentiator for us has been the development of a services offering. And honestly, in our business, we're competing, selling products that you can get lots of different places. You can buy them often at Walmart or Target. You can buy them online. And so to create differentiation about why you would buy them at Best Buy, we've developed a service offering that helps fulfill the needs that arise with consumer technology. Things do not work as promised. They have fantastic capabilities, but they're complex. And to make things work together well and fix them when they break and install them when you want to have a great experience, we developed a capability that we call Geek Squad. So that's the U.S. business in the principal store environment. So before we move on, questions about the U.S. business? Question? So good question. So we are both, the question is about channel conflict with the cell phone carriers, because we are both a partner in selling their services and helping develop subscribers for them, but also a competitor with their stores. And so how do we deal with that competitive conflict? And the reality is they very much want to work with channels like Best Buy, or even to a lesser degree Radio Shack or the independents, because no single carrier has more than roughly 30%, 35% market share. So they have more customers to gain than to lose competing with us directly. And so they are looking for channels to help them get the other customers that they don't serve. And often through their own channels, they're going to be serving their existing customers. There are conflicts. Our mobile phone business is absolutely rocking. That team is executing it really well. So well, though, we do run into conflicts. As an example, when there is a hot new smartphone that's released, there is limited availability. And just an example, the first 4G phone, the Sprint Evo, was launched in June. Sprint had decisions. I only have so many handsets manufactured. How many do I want to allocate to the Sprint stores? How many do I want to allocate to Best Buy? And that, in the moments, it creates conflict. But long term, we're a complementary channel to them. It's a good question. Question?
Hi, Wendy Angstrom on faculty here. I had some previous experience with your EQ Life store that was dedicated towards health.
Yep.
Did that continue, or did you decide to stay away from the health side?
Yeah. So the question was about an experiment that we ran called EQ Life, and the broader question about experimenting with new retail concepts. And as part of how retailers grow, it's important to continuously try new things, to try and understand where underserved parts of markets are. And we had a hypothesis that technology was going to play a bigger part of people's health lives, and particularly that technology was going to be increasingly important to female customers, which honestly Best Buy has historically underserved. So we developed a new retail concept, ultimately became 4 stores. It was called EQ Life. And we did some very innovative things. We sold the first home defibrillators at retail. We sold accessories for cell phones that allowed diabetics to take their blood glucose levels and feed that information through their cell phones. And honestly, I think we were ahead of the industry. I'm sure we could have executed it better, but our aspirations for that particular experiment didn't work out, and we've since shut down those 4 things. But honestly, that's okay, because at a scale where you have 1,100 or 1,200 stores, that size and scale of an operation allows you to do relatively expensive experimentation and new things. And you have to be trying to understand where the new growth areas are. But we've since discontinued that. Okay, on to Canada. We entered the Canadian market in 2002 with the acquisition of the largest consumer electronics retail in Canada, a company called Future Shop. And it was a really interesting process. We courted that company. It preceded when I joined the company, but I understand we courted that company. We courted the principal shareholder. We couldn't agree on terms, and so we said, fine, respect your decision. We'll enter the market ourselves. It was a public company. We decided to enter the Toronto market. We signed a dozen leases in the Toronto market for great real estate. And wouldn't you know it, the share price of Future Shop started to come down as people realized the new competitive threat of a great operator in the U.S. Eventually, over the course of a year, we reached terms with that company. We entered the Canadian market through the acquisition of Future Shop. Our original thesis was to rebrand all the Future Shop stores Best Buy, but as we got into it, we realized there might be more market opportunity if we operated 2 brands. And so that's what we do now, in fact. Future Shop is roughly 130 stores. Best Buy is roughly 70 stores. We operate 2 differentiated value propositions, and collectively, we have more market share, over 35% market share, than if we had operated 1 brand. So it was a very interesting lesson about how to enter new markets. Next is China. And as I mentioned, we entered China originally through a joint venture with a company called Jiangsu 5-Star, the 3rd largest consumer electronics retailer in China. Absolutely fascinating market. It's a country that did not have organized retail until the late 1990s. So almost all of the sales for consumer-related products were done through mom-and-pop shops. And that was highly controlled by the central government, and it was deliberate. There was a change in government regulations that allowed chain stores to start to emerge. It allowed foreign direct investment. Ourselves, Walmart, Home Depot, a number of the large European retailers, Tesco, Carrefour, Metro, all had converged on China. And we had, at one time, a number of global retailers trying to figure out how to enter the market. We saw the tremendous opportunity, the consumer investment, and the change in consumer spending, and we wanted to be part of it. We also had a large operation in China already for our private label products. A number of the products that we sell in Best Buy are Best Buy home brands. Insignia, Dynex, Geek Squad, Innit are some of our home brands. And so we have a large sourcing capability in Shanghai, and that led us to spend a lot of time and understand the company. So we acquired Jiangsu 5-Star initially through a joint venture where we acquired 75% of the company, incented the management to stay on for several years and help us transition into the country, and then we bought out the remainder of the company. And we've since opened about a half a dozen Best Buy branded stores in Shanghai. And over time, we anticipate this being a tremendously important part of our enterprise. Question? Yeah. So the question is about change in valuation of the RMB and whether it helps or it hurts. And historically, unlike most global currencies, the RMB has been controlled by the central government, and the exchange rates relative to the dollar have traded within a pretty tight band. There's a lot of pressure to ease global trade imbalance by allowing those foreign exchange rates to fluctuate with market dynamics. And it is gradually happening, very gradually happening. We view it honestly as somewhat of a neutral thing. The consumer electronics industry has historically been dollar-based, so all the products that we buy are based in dollars. We generate revenues in RMB. We have expenses in RMB, so we're fairly well matched. So we're in a fortunate position to have a number of different businesses, so it's relatively neutral for us. Any other question?
What are the biggest challenges you face growing in China compared to developed world?
Yeah, biggest challenges we face in China, and our challenges, I would say, are similar to the other non-Chinese retailers that are trying to enter that market, and that's the depth of appreciation of local consumer needs and how they're different from retailers' home countries or conceptions about how you make money doing different things. So in China, what we found, what IKEA found, what Walmart has found is that price is hyper important. And we have interesting phenomena, for instance, of the ability to negotiate and haggle for prices is an expectation. So we have things like spontaneous buying groups that emerge on the internet, people that don't know each other, to say, we want to buy a 42-inch television, converge on this store in Nanjing at 10 o'clock. If we band together and we're going to buy 10 of them at a time, we'll get a better price together. So there are just dynamics that don't exist in other markets. Question, Daniel.
Do you see there being an issue of high employee turnover that's higher than in the U.S. because wages, such as see all these companies coming in and now who gets better?
Yeah. So the question is about employee turnover in China, and I would break it into two parts. In more developed cities, Shanghai, Beijing, definitely the rate of employee turnover and the expectations of employees about, am I getting a job, am I putting something on my resume, am I trying to get paid, are different than in other parts of the world. So people do flip jobs very quickly in Shanghai and in Beijing. And just the societal expectation of personal betterment and change and movement is different. So that has been a management challenge. At a store level, less so. Even with training, yeah, so investment in personal development is a great way to limit turnover, and it's a great way to help employees fulfill their capabilities and establish more meaningful, deep, long-term relationships with employees. So investment in training is part of that, but there's more a mentality of, okay, I'll take the training and then I'll use the training to help me get a better job also, compared to some other countries. Question?
You talked about in Canada how when you first opened the Best Buy shops, that it started to take away business from Future Shop. As you acquired Future Shop, has that changed, or is Best Buy still the same?
Yeah. They cohabitate very well. We've been very deliberate about creating enough differentiation in the customer experience that it's more about acquiring new incremental customers than taking customers away from each other. For instance, Future Shop is the one part of our North American business that continues to be commission-based. Other parts about the Best Buy brand are people expect objective, good customer service. In Future Shop, in part because it's often in more urban environments, it often serves a more immigrant community, it's culturally more expected. There's only about 40% product overlap. The types of products are fairly similar, but the exact, what we call SKUs or stock keeping units, there's only about 40% overlap. So we've honestly looked at it now recently and said, with the departure of Circuit City, should we develop a second retail brand in the U.S.? And if we do that, should it be store-based? Should it be online-based? What channels should we develop? Because we're now about 22% of the market, which is the consumer electronics, consumer technology market, which is a lot, but there's also 3/4 of the market that we're not addressing. Question?
If you could just talk more about like the bankruptcy of Circuit City and how like it has given rise to opportunities like that for Best Buy.
Yep. So the question is about the departure of Circuit City in the market. And just to level set, Circuit City at its peak had about 700 stores, did about $11 billion in revenue, and for 15 years was the largest consumer electronics retailer in the U.S. Best Buy is a very competitive culture, and like the University of Notre Dame, we like to win. We define competitors that we compete against. We understand what our relative advantages are. We understand what other people's relative advantages are, and we play to our strengths. And through the global economic crisis, they didn't make it. They closed all those stores. They went bankrupt. And so last year, it was a sea change of market opportunity for us. By the time we passed them 10 years ago or so, and by the time that we passed them, we were almost 3 times their size, but still a very large part of the market, the number 2 player left. So last year's strategy was about taking market share. There are a lot of customers up for grabs. How do we help them reestablish their shopping patterns, their relationships with Best Buy brands? How do we communicate with those customers? How do we help them understand the good things that they saw in Circuit City are actually better at Best Buy, and help them understand that, help make sure our store experiences did that, and to focus almost surgically on the most profitable parts of the business that we wanted to take where there was a void, geographically and in their product offerings. So probably our biggest strategic focus last year, in the year after they left the market, was how do we transfer those customers over as much as we can. We did some very tactical things. We went to the people that provided their consumer private label credit card, the Circuit City credit card, and we worked with Chase and took over that list and started directly mailing that list, offering credit to those customers. So there was a whole team that was organized about how we maximize that transfer, because billions of dollars were at stake, and we're very pleased with how things turned out. Question, David?
How did Best Buy survive the recession, and how are you guys continuing to stay afloat during the recession as well?
So the question about how did Best Buy survive the recession when other retailers didn't? There has been a tremendous number, a historic level of store closures in the last 2 years. And a big thing that helped Best Buy and a big thing that helped Ford was a philosophy about capital structure and strength of the balance sheet. And I don't just say this because my team played a big part in this, but we are aggressive operationally. We try and develop new experiences for our customers. We try and provide great customer service, but we're conservative financially. So we had a very strong balance sheet. We had a lot of cash. We had $2.5 billion of undrawn bank lines. We had great relationships with our vendors to have access to product, to continue to provide product. And whenever there's a change of the magnitude that we talked about, things that you thought could never happen, happened. You know, we had crazy things like our stores would have armored couriers pick up cash and take it to banks in parts of the country, and we were asking ourselves questions about, is that bank going to be there? Should we have the armored courier drive to another bank? Because banks were falling apart. So the main thing, one would be from a financial risk tolerance, and we're very conservative financially. The most important thing, and I would say the one thing that has made Best Buy most successful is the quality and the determination of our employees, because ultimately it's led to the profitability of the company and the continuation of the brand relationships. So that is by far the most important thing. Secondary was, at the time that the storm hit, we had We had water in the basement and gas masks and whatever else analog you want to create. Okay, is there another question?
Mine was going to be along the same lines in terms of, seniors, and it's like you're going to talk about what we should look at in choosing a company, but what the differentiation was between, why you guys were successful in Circuit City was not. I think you kind of addressed some of that.
Yeah.
What the major factor was that you're leading for so long in the industry, and what went wrong from there.
Yeah. So big points of differentiation, and in the midst of the storm, so October 2008, we had an experience that we thought we'd never have. We got the call from the CEO of Circuit City saying, as you realize, we're probably in a fair amount of financial distress. We're exploring all options. We may file for bankruptcy. We would be interested in selling if you're interested in buying. And we had a whole day meeting that included those open discussions. What were the key things? What would you put your finger on? And some of them were somewhat surprising for us. For instance, they made a strategic decision several years ago to exit the appliance business, which is, for most retailers, not a highly profitable. It's a capital-intensive, inventory-intensive business. And when they exited that business, they thought, okay, we're going to stop a loss-making business. Well, with it left lots of customers and some male-female dynamic that justified families coming into Circuit City as opposed to just guys coming into Circuit City. So they viewed that as an important thing. Another thing was, we talked about channel conflict between the mobile phone carriers and Best Buy. We live with lots of channel conflict with the internet. And whether the price that you offer online is the same as the price that you offer in the stores, because you're providing a lot more service and immediacy of satisfaction in the stores and a real tactile experience. They made some policy decisions about letting the stores match internet prices for all things that created a spiral of profitability, a downward spiral of profitability. So there were several things, but it was a fascinating, in that time, in the global financial crisis, there were a lot of things that you thought would never happen, and having those discussions. Coincidentally, two of the principals were former Best Buy people that I knew well, including the CFO. So it's just strange dynamics of conversation. Question?
You just mentioned how with Circuit City, the appliances didn't work out so well, trying to sell appliances,
Yeah.
and other similar stores that hadn't worked so well. So what motivated Best Buy to acquire Pacific Sales Kitchen and Bath Centers? What do they think is going to be working for them?
In my opinion, Pacific Sales and the business model that it runs is the best in the appliance industry. It is a relatively high-service, low-cost infrastructure, and it does some things that are just counterintuitive. It's only open 40 hours a week. It's closed on Sunday. It's closed on Monday. Its employees work 10 to 6. And it is typically in locations that are more destination-based. When you go to a Pacific Sales, you're driving into an industrial park and you're thinking, wow, I'm going to get a great deal on a sub-zero range. And so, and they are very good prices. So there are a number of things about the nuances of the business model that make it, in my opinion, more profitable than any other participant in the industry. Also, appliances compared to other consumer electronics and consumer durables is still pretty fragmented in its distribution. Sears is number 1, Lowe's, Home Depot, and then ourselves are number 4. But even those 4 comprise less than 50% of the industry. The balance is still a lot of relative mom and pop and chains of 4 and 5 people that are family run that over time will consolidate. So we wanted to, a theme in a number of our acquisitions is adding the management capabilities to help us grow in a market. And we've done that successfully with Pacific Sales since we acquired it. We've about doubled the store base, and now we're doing the stores within a store test. So I honestly feel very positive about where our appliance business is going. Question?
As business students, we love our SWOT analysis.
Yep.
And in Syracuse Pacific, we talk a lot about opportunities. And I'm just wondering who or what is your biggest threat aside from macro
So the question is about SWOT analysis, or strengths, weaknesses, opportunities, and threats, and who or what are some of those. From an opportunity standpoint, and we'll get into this eventually, is our model has been historically based on what I would call selling hardware, selling cardboard boxes of plastic and circuitry. And some people say it's kind of like Mexican food. It's all kind of the same thing, just mixed different ways, but it's cardboard boxes with plastic and circuitry. Increasingly, our opportunity is selling the things that make those boxes more valuable to our customers, better experiences. And a large portion of that value is in what we would call connectivity. So you're buying a handset, but you're also getting a 4G broadband service. You're trying to buy a television, but to have a great experience, you may want DirecTV HD service. For the carriers and the telecommunications companies that provide that, their monthly billing is often more than $100 a month. So people may think they're buying a $199 iPhone, but they're also signing up for $2,000 worth of contractual payments to AT&T. And so AT&T will pay us a lot to help generate that subscriber for them. So our biggest opportunity is a shift in where value is created in the industry from the hardware to the connections. And that's a big part of our investment thesis for our stock. In terms of threats, I would say it's channel evolution. And by that is we need to constructively use the internet, and now increasingly mobile commerce even, mobile e-commerce, to better serve our customers. And we feel a multi-channel play in the end is much more powerful than a single channel play like an Amazon or like a Newegg. We have a very large .com business. BestBuy.com by far and away is the largest player in that space. And about 40% of the transactions that are clicked through in BestBuy.com are actually picked up in Best Buy stores. And that immediacy is valuable to people, and it provides a competitive advantage. So the threat is not adapting to that technology change, because that immediately also has sources of competitive advantage for others if we don't adapt. Mr. Babowski.
Mr. Robinson, I noticed, like most national retailers, Best Buy has grown nationally and internationally. The one exception to that rule has always been Walmart. They grew rural to urban. Why has no retailer, maybe with the small exception of Dollar General, had any success with creating a formula and a model that works in smaller rural-type neighborhoods?
Mm-hmm. So the question is about relative market attractiveness and why do retailers choose different geographies. And a few have focused on retail, but on rural environments, but relatively few. The principal answer is around population density and sales velocity. And when you think about the model of a retailer, we have relatively fixed costs in rent. We have relatively fixed costs in at least a minimum level of staffing in the store. So in order to cover those fixed costs, you need a fair amount of sales velocity and gross profit flowing through each box. And honestly, it's harder to do for a lot of product categories in more rural environments. Some business models, like the dollar stores, if they make great opportunistic buys, they have a gross profit on the product that it still works at lower sales velocities. But in a business like ours, where you can be selling hardware in gross profit in the teens, our total gross profit is about 25%, but for hardware, maybe it's in the high teens. You need an enormous velocity of things that you're selling at that narrow profit margin to cover those costs. So it's one of them is just raw economics. Do I think there's opportunities for some very creative models in those markets? I absolutely do. It's a different competency than a lot of retailers have. Okay, I'm going to hit on a couple things about the remainder of our business, and there are a few aspects about our business model that I'd like to get into. 3 years ago, we entered Europe through a joint venture with, in our opinion, the greatest cell phone retailer in the world, a company called Carphone Warehouse. Carphone, UK-based, but they operated 2,400 cell phone stores across 10 European countries. What we saw in that joint venture were great retail operators. We saw deep competencies that we wanted to bring onto our team around selling connections, not just selling the hardware, but how do you work with the carriers? How do you maximize the experience for the customers in the contracts that they're entering into? And we saw a market entry opportunity for Europe. And we just had a question about competencies to play in different geographies. A lot of retailers have had problems moving outside their home country. And we had the humility to realize maybe we didn't have the strength on our bench to start to open big box stores in Europe, but maybe if we aligned ourselves with what we felt was a really good team, we could materially increase our chances for success. And so we opened our first big box store in Thurrock outside London earlier this year, off to a good start, early days, but we've now entered the European market more broadly, and we're very excited about the strategic impact of building our connectivity capabilities that we've achieved through Carphone Warehouse. We've also opened, in the last 2 years, 5 stores in Mexico. We should have done that 10 years ago. We think there's opportunity for perhaps 80 to 100 stores in Mexico over time, but it's early days with that. And as I mentioned, a big part of our business are our multi-channel capabilities. I think an underappreciated part of a good retail model is also its call center care and the interchange between a store experience, an online experience, and a telephone experience. And I think we're pretty good at that. This is just a quick summary of the revenue growth of the company. This year we'll do just over $50 billion in revenue. It's grown tremendously at a 15% compound annual growth rate. From a dollar change perspective, that's among the fastest growth in all retail. When I joined the company just 8 years ago, we were just under $18 billion in revenue, and we were in 35 states. Now we're in 50 states and 18 countries. So it's been a wonderful experience to see how a company evolves and adapts like that. And also on this chart, we depict our operating profit margin, which has been relatively stable throughout. Consumer technology changes, new products come in, products reach different points in a consumer adoption curve, but over time, generally, our profitability has been very stable, and we've invested our excess profitability in continuing to grow the company. So our fundamental model starts with understanding what consumer needs are and rallying our teams around how do we best serve those needs. What is somebody trying to do with a computer? Not selling them a notebook. How is someone going to experience home theater? What are they going to watch? Where are they going to watch it? Do they care about surround sound? Do they care about high definition? What's in their budget? Understanding their needs is the foundation of our business model. Then we work with world-class partners, the Sonys of the world, Samsung, HP, Microsoft, the gaming companies increasingly, to try and jointly develop products and services to help fulfill those needs. Something that these partners see and value in Best Buy compared to other ways that they can sell their products is we can give them more direct consumer feedback about what's working. And then ultimately, we strive to create shareholder value. And I understand a lot of people in the room are finance majors. We define success at Best Buy on metrics that are called economic value added, or EVA. And that is not just earnings per share or net income, but we also factor in a cost for the capital that we're using. So we try and be very efficient in how we're growing. It's not just about profitability, but it's about cash flow and profitable growth. This page starts to talk about the evolution of the business. And when you step back, Best Buy is a company that knows that almost everything we sell in the store, we're not going to sell 10 years from now. Shiny discs are going away. VHS players came and went, fax machines came and went, telephone answering machines came and went, and most of the things we sell now are going to go at some point. So we have to have a business model that is highly adaptive, that it's a culture of how do we create new offerings for our customers. And on a couple different dimensions, this shows our history of store growth. It shows our geographic expansion from being a regional US retailer to national to North America, now a global company. And it also shows an evolution of our profit pools from hardware to selling accessories to selling services to now selling connectivity, because that's what customers need, that's what they value. So a key thing about the success of any company, but especially retailers, is how do you adapt? Is it in your DNA to change your business model continuously? And we're fortunate to be in an industry where we absolutely must. Everything we sell is constantly changing. So I would like to share a little bit of a video that describes Best Buy.
Best Buy is the world's biggest and most successful retailer of technology. Not only a company best known for the store that bears its name, but actually a portfolio of international brands that includes Future Shop, Canada's biggest electronics retailer, the Carphone Warehouse in Europe, and 5-Star Appliance in China. Best Buy is a growing, complex company with thousands of physical, virtual, and international storefronts, and more than 150,000 employees around the world focused on bringing the benefits of a digitally connected world to customers everywhere. But the secret to its success is pretty simple. It's a company focused on technology that never forgets what it really is: an organization of, by, and for the people. Best Buy's history is marked by 4 values, deeply woven into the culture of the company. A determination to face the reality of constant change with courage. A conviction that how a company behaves is just as important as the financial results it creates. An awareness that the journey is just as important as the destination. And finally, a deeply held belief in the ability of every human being to contribute, change the company, and change the world. It all officially started in 1966 when a man named Dick Schulz opened Sound of Music, a hi-fi stereo store in St. Paul, Minnesota. It was a modest success, and Dick added a store every year or two until 1981. That's when a tornado wiped out the most profitable Sound of Music store, a disaster that turned out to be a new beginning when Dick and his team responded to the challenge with a hugely successful tornado clearance sale and learned that people were ready for a change in how they shopped for electronics. That they liked lots of space, lots of product, and low prices. The new idea was dubbed the Superstore, and Best Buy was born. In 1989, Best Buy took the big box concept even further, revolutionizing the electronics retailing industry by launching what they called Concept 2, a non-commissioned sales force and a store layout that was fun and easy to shop, along with a new logo to mark the occasion. By 1995, Best Buy was a Fortune 500 company and a national retailer, but an unprofitable one. The problem was size without discipline, and the Best Buy team took the problem head on, standardizing the operating platform and putting a tighter rein on inventory. The result was a 5-year run that once and for all proved that a non-commissioned sales force could be a profitable one, and Best Buy became the #1 retailer of electronics in the world. In 2002, Dick Schulz handed the reins to Brad Anderson, a Best Buy veteran since 1973. Brad's time as CEO was marked by 2 major themes: a conscious shift in focus from the products sold to the customer's wants and needs, a simple but profound revolution known as customer centricity, and the expansion of Best Buy's portfolio of brands around the world. The acquisition of Geek Squad, the computer service and tech support company that was at the time a small Minnesota company, Future Shop, the premier electronics retailer in Canada, and a joint venture with the Carphone Warehouse in Europe were pivotal steps in building a company capable of bringing the benefits of technology to people everywhere. In 2009, Brian Dunn, himself a 25-year Best Buy veteran, became the company's 3rd CEO and immediately began to extend that core mission in what the company calls, simply, the connected world, which Which brings us back to 1985.
When I started with the company in 1985, the really hot item was a 4-head hi-fi VCR. Crank it up and you just say, just listen to that channel separation, right? If you had told me in 1985 what we'd be able to do with technology, I wouldn't have believed you because it would have been too outlandish, it would have been too over the top. I can sit with my notebook computer. Within 2 clicks, I'm face to face with my kids back home when I'm in Asia, and I can talk to them just like I'm talking to you right now. It used to be a long distance phone call home from overseas was prohibitively expensive, and now we're 2 clicks and we're talking to each other face to face. I used to play Atari Space Invaders with my brother, and I could only do it when he was right there. You can now connect and play with people across the world. That connectivity puts us in a position to get more joy out of life, to be more productive in life, and to actually help us advance as a race, as a human race. It really starts to shrink the world and make the boundaries of space and distance less and less significant. This stuff doesn't jump out of the box and work well together. It requires people to put these things together, connect them in a way around their lives that makes sense. It also requires people to inspire the art of what's possible, to ignite our latent dreams. I love the technology. I love the stuff, but the stuff isn't the thing. The thing is that I'm able to reach out and connect with the people I care about, the things I care about, wherever I am in the world. That is one of the best manifestations of what this connected world means and what this technology can do for us.
And that's the story of Best Buy so far. A pretty cool place that grows and changes every day. An extraordinary company built by ordinary people. A company with an amazing history and an even more amazing future.
So that evolution about what's important to customers creates tremendous opportunities for us in our business model. About helping them find the right connections to power the devices, helping them understand the services to keep them up and running. Previously, it may have been important for a student, for instance. How many people have had problems with their laptop since they've been at school? Okay, like over half the people. So a lot of people probably, I hope, have benefited from having that repaired at Best Buy or having an extended service plan at Best Buy. That's important, but now, for instance, the evolution of technology is allowing us to not only provide protection on the hardware, but continuous data backup. So if there is a problem with your computer, you're up and running and your data is shifted back right away. That's just a new service that we're starting. So as technology changes, as consumer needs change, we have to adapt, and it creates new business opportunities for us. So from our investors' perspective, they'll often look at a company like Best Buy and say, isn't the internet just going to take away all your profit margins? And it can do that in parts of our business, honestly. But what I talked about developing new offerings for our consumers that are even more important than the hardware are what has differentiated Best Buy. So it started with accessories, not just the TV, but all the things that you need, the speakers, the receiver, the wires, the installation if that's important to you, the tuning, putting the speakers in the walls if that's important to you, all those things. The content, so it could be things like the Netflix service, it could be things like Best Buy's new Cinema Now service, which is movies on demand over IP. Check out Cinema Now, it's a Best Buy branded service. It could be like Napster, which is a subsidiary of Best Buy. And we're now offering and embedding Napster service in our televisions so you can manage your music collection from your TV screen. The services we talked about, and increasingly connectivity. And we are the best platform in the world to help technology providers, whether it's telecommunications carriers or hardware manufacturers or software companies, come in contact and interact with our customers. So a fundamental investment thesis about Best Buy is technology going to continue to be important to consumers, and is it going to grow? And I think the answer to both those things is yes. So what that's resulted in is an enterprise now of about 180,000 people that spreads across the world. We manage the business in the Americas, Canada, US, and Mexico, the 10 European countries that I mentioned, and now 2 brands and 2 businesses in China, in addition to a very large private label sourcing business in Shanghai and Shenzhen, China. And what creates that differentiation and fuels us, foremost, as I mentioned, is the role that we ask our employees to play and how they can contribute. And if employees from the store level, store management level, corporate level, are given an opportunity to contribute their talents, and you have a dynamic environment where things are changing, good things come out of that. There is no way, with all of the optionality in tech and consumer technology, that any small group of people at the top of a company can come up with the best answers. You have to create a system for people to contribute, and that has been a differentiator for Best Buy. Daniel, did you have anything that you wanted to add about that?
So, my name is, can you guys hear me back there? All right, my name is product of the university. Yeah, you guys hear me? All right. I'm a product of the university, came out as an undergrad in 2004 with a concentration in information systems. I was hired on at HP at the career fair to join them in Boise, Idaho. So going back to what you were saying about decisions you had to make, I had to make the decision to go to Boise, Idaho, and that was quite an experience within itself, but a great one. So I started there as a business analyst, and then the company got restructured, and I had a degree or experience in information systems. So they said, we want to keep you, you're a great professional, so let's move you over to our R&D department, research and development. So then my title became business analyst to engineer without going through the engineering program. So what I was in charge of doing is just making sure the defects you didn't get any defects from when you got the product at Best Buy. Everything worked. I was the gatekeeper. That was my responsibility. So I wanted to diversify my skill set, but in Idaho, that option was very limited. So I took inventory of the situation and decided that I needed to diversify my skill set, and one way I needed to do that was leave Idaho and unfortunately leave HP. I did not want to do that. HP is a great company, but I had to look out for my career and my best interests. So I relocated myself back to Miami, Florida. I'm from Miami, Florida. And I knew I had to stay on top of technology because that's what I got my degree in, and technology is always changing. And I wanted to hone my skill sets in sales. So I went to Best Buy, went through 3 interviews, very, long process, but it's worth it because they only want to hire the best. So in that time, I've learned so much about sales and how to provide the full solution. And what I mean by the full solution is I don't just want to sell you a computer. I want to sell you a printer, I want to sell you a bag, I want to sell you paper, I want to sell you Microsoft Office. So that drives revenue and profit at the same time. And in that, one of the skills I've become proficient in is customer issue resolution. And what I mean by that, the customer comes in, they buy a product from Best Buy, 15 days later it doesn't work. So they're upset. So therefore they're taking their frustration out on you. The excellent training associated with Best Buy taught me how to deal with that situation. Don't become offended by that. You know what? They're just having a bad day.
That'll help you in your married life too, Daniel.
Thank you. Thank you. I appreciate it. See, they're preparing me for life. But I've become very proficient in that skill in not handling the situation, but also garnering future business as well, and not taking offense to what they say. I wrote down a list of things of why I love Best Buy, because there are a lot of things. So excellent training. They provide excellent training. A lot of us, when you join a company, you may become disappointed in the training in which they provide. But Best Buy, they provide excellent training because I'm armed with everything, all the tools I need to better assist the customer and how to deal with the customer. Another thing is they reward their employees. If your store performs, then you're going to get rewarded. It's not like, oh, well, thank you, you did a great job, come back again. We get rewarded. Also, they promote professional growth. You have an opportunity to become GM or maybe even enter the corporate world if you so choose to do so, which most of us are going to do. It's a festive environment, as the video showed. Everybody was cheering. That's not a facade. We go in, we're happy, we're playing music at work, everything. It's a very festive environment there. Like I said, you will become proficient in conflict issue resolution. It provides great insight into the business. Like I said before, it just helps you understand the full solution. You're just not responsible for selling the product. You must attach. That drives business and revenue, which you will be rewarded for when the reward time comes. Let's see. They listen to their employees, and they actually do, and they implement the changes that you suggest as well. And the greatest thing I like is that I actually make a tangible difference in somebody's life. You don't understand how important it is for a person to have a computer that works. Without a computer, you can't get a job. And without a job, you can't put food on the table. So if I'm able to better assist that customer and recommend the right computer that they need, then I'm having a tangible difference in the quality of life I'm able to provide them. And lastly, I feel that I'm responsible. I have a responsibility towards the company because every day when I worked at Best Buy, I worked for the #1 store in Aventura. And everybody knows where South Beach is, right? So you drive 30 minutes north, you're in Aventura. So every day they let us know how we performed the previous day. And they're like, hey guys, you didn't meet the budget for the day. We need you guys to attach more and things like that. So I feel like I have a personal responsibility to perform well. And when I do, we get kudos to do so. And that's why I really love Best Buy, and they also help me professionally and becoming more proficient and becoming in my sales skills and things like that. So that's all I have to say.
Thank you very much, Daniel. Thank you. That's outstanding. I'm really glad you feel that way. Daniel and I just met each other 10 minutes before the presentation started, so this is all kind of impromptu, and I'm very, very proud that you're at the company, and I think you're representing us really well, so thank you very much for that. So transitioning more into the advice and personal things, maybe just some thoughts about what you should look for in a company. And I was preparing these thoughts, and I'm thinking, Caitlin's going to be in front of me, Ryan's going to be in front of me, Claire's going to be in front of me, and a lot of their friends are going to be here. So these are things that I think are helpful to look for in the companies that you'd be considering. Not all of them are going to be important for you personally, but look for the ones or two that resonate with you, that make an emotional connection. So one way to look at it is an opportunity for a career, at least the ability to have options for a significant runway. A lot of companies you may look at and join because you like the first role that you'd be in, or maybe you like, maybe too much, you like the brand of a company. It would be cool to work for X. That's good cocktail conversation if I tell people I work for X. Think about at least giving yourself the opportunity to have a career with company. You may choose to move after a couple years, but at least you'll have an option. Another thought is we can be distracted by brands, we can be distracted by cities or geographies, we can be distracted by pay, but it's going to come down to enjoying the work that you do. Things that you really like, that you're passionate about, that you, I said lose yourself in. By that I mean you just enjoy the work so much you're not thinking about other things. You're not thinking about, boy, how long is it until 5 o'clock? You're thinking about, wow, I'm really into this project, and my team and I are enjoying working together, and it's just about it. So give yourself opportunities to really passionately enjoy the things that you're doing. Something that sustains companies and in fact sustains universities. I was really pleased to see how proudly Mendoza displays key values or tenets about the Mendoza brand, and I think it is a growing Mendoza brand. Good companies have those values, and they sustain the company through ups and downs. They provide points of reference. And the things that have worked for Best Buy are having fun while being the best, showing respect, humility, and integrity, learning from challenge and change, and unleashing the power of the people. And it's not just talk. Each year, I personally and all of my team members and every employee at Best Buy goes through performance assessments. 20% of our assessment is this person living and teaching these values? Are they helping perpetuate a culture that has made us successful? So we have this open dialogues with our team members about, are you showing respect for other people? Are you appropriately humble? And very subjective conversations, but they're important because the culture sustains the company through those changes. Daniel mentioned this one, and it's a culture where employees are given a chance to make contributions. Some companies are title sensitive and they're reporting relationship sensitive, and there are clear expectations of roles. And honestly, I think that can limit the potential contribution of employees. It can limit the self-actualization of the people in those organizations. And for our company that has such tremendous and continuous change, we have to invite people to contribute. And we've just seen some amazing things. One of the best examples was a friend of mine was vice president of database management in our IT department. And he was responsible for helping make sure we're capturing customer information and mining it to make our marketing campaigns better. He happened to be of Chinese descent, grew up in northern China. This is 2003. The iPod is being introduced. He's an electrical engineer by background, and he picks it apart, literally takes it apart and says, we could build this. We could buy the hard drive from this partner. We could buy the software from this partner. We could hire somebody to package it. And it wouldn't be as good as an iPod, but at least it would provide an alternative offering. So it had nothing to do with his job. It was about his personal passion. And he came to the head of this new business team that I mentioned before, and he and two other people that worked in the IT department said, we need $50,000. Can you guys give us $50,000 to develop what in effect was an iPod knockoff that we would sell through the Best Buy stores? That kind of degrades the quality. It actually was a very good product. That led to the first introduction of a private label product, which led to another, which led to another. Now we'll do close to $2 billion in revenue in private label products, 900 different SKUs, 5 different brands sold in all of our countries. But it started through having an environment where someone who worked in the IT department said, hey, I've got an idea. I'm going to put a business plan together. I'm going to listen. I'm going to try and find someone who will listen to me and give me a chance. So it's an amazing thing to watch. And there are a number of other stories like that. And because consumer technology changes, you have to be open for that. So this is important, I think, and underappreciated, that just the fundamental element of is the company growing and evolving has a material impact on the opportunities for the employees to contribute. This wasn't by design, but when I graduated and I went to work for a bank in Chicago, I went to work for what, as I said, was probably the number 3 bank. Had I joined JP Morgan or had I joined Goldman Sachs, I definitely wouldn't have had the career opportunities I had of a spunky, smaller company that really wanted to grow. And we grew from about 1,000 employees to 22,000 employees. And along that way, it provided me personal opportunities to contribute just because nobody else was there that was there to do it. No one had done it before. So you hold up your hand and say, hell, I'll try this. So growing and evolving companies create opportunities for talented employees. Jobs that help you learn and raise your game, nothing's certain. So I work for a $50 billion company. It is possible that that company could be acquired. It is possible that shareholder activists could take a position in our stock and try and force us to do something that changes my role. You always have to be developing a portfolio of skills to create options for other things. Make yourself valuable. And so try and put yourself in an environment that is deliberate about training, that is deliberate about career development, and provide you experiences that are applicable to a number of different things. Look for teams that are full of great people that you respect. I mean, when you're interviewing with different companies, you're going to visit companies at career fairs, spend time with people at a personal level. Say, can I see myself with this person? Does the culture feel right? It's almost like picking a school. Visit a few, Spend time with them, try and understand the culture. Think about how you would fit in. It's going to be hard to do because you're going to see such a narrow slice of the company through the interview process. But try and learn everything you can. And very important is big employee discounts on consumer electronics. So that would be my recommendation about what to look for in a company. Do you guys have questions about that? They're all not going to be important to different people.
I know being here at Notre Dame, our big focus is on social responsibility, and this morning we had a couple of personnel talk to us about that. What do you guys do in the communities that you're involved in, or on that level? If you can address that for us. Great question.
So the question is about corporate social responsibility. And I would say our approach fits our culture, and it creates an environment for our employees and our stores to contribute their talents to an outcome. So tactically, it's funded by, we dedicate about 1.5% of our pre-tax profits to fund charitable activities. So that's big. It's over $30 million a year that we're funneling towards reinvestment in our community. How we do it, unlike some companies where there's a small group of people that say, we'll give this much to the United Way or we'll give this much to the American Cancer Society, all great causes. But our culture is more about how the employee plays a role. So we distribute that down more to a territory level, to a district level, to a store level, as we call it, and let employees drive where the dollars go within certain boundaries, within their communities. And in addition to that, in addition to the financial support, we do a lot of team-based building things. I mean, my team and I, for instance, in Minnesota, do a lot with children's hospitals and clinics in Minnesota. We are pleased to say that hospital is the only hospital in the world right now with full-time Geek Squad agents to help families with their consumer technology needs. And it's been tremendously successful. And now we're trying to roll it out to many, many more hospitals on a pro bono basis. So another way is doing things that people are passionate about and letting them direct that. So within some described boundaries, our employees can contribute time, and we will match financially the time that they contribute at a rate of about $40 an hour up to a certain amount per employee, I think it's $2,000 a year. So my assistant, very passionate about helping injured animals. She contributes her time to that. Best Buy matches her time contribution with a financial contribution. And she is so committed to Best Buy now because it's helping further something that she's passionate about. So there's lots of different ways. There's other things that are probably bigger and more impactful. We voluntarily led the industry in electronics recycling. So virtually anything you buy at Best Buy, you can bring back at Best Buy, and we will take it for free. We've volunteered to reduce our carbon footprint and lead the industry by reducing our energy consumption in our stores and working with our vendors to increase what are called Energy Star approved lower energy consumption electronics and appliances. So it's increasingly important not only to Best Buy but to the corporate environment in general. So question?
Yes, thank you. By the way, this is excellent advice that you're giving students. And,
Oh.
You asked me if I had other things before we started that might help them. So let me link this back to something that you said as part of your success as a firm, and that is being fiscally conservative and being aggressive, if you will, operationally and uphill marketing and the operations through experimentation with customers. That's a difficult thing to balance internally in a company. I tell students this all the time. If you reflect on potentially conflicts that's created and how you resolve that, how would you translate that into competencies that you think our students should think about developing themselves? You have 3 children here, and so how would that translate into what they should think about even in terms of what courses to take here as they're trying to prepare for that type of organization that's going to be successful at home?
That is, Professor Porter, no, that's an excellent question. It's actually a good segue to the next slide. So let me try and address some of those things, and if I don't precisely hit what you're asking about, then let's drill in a little bit more. So with that is what makes employees successful at Best Buy. So I asked my son the other day, what do you think these people want to hear? And the foremost answer was, how do I get a good job? But I think more important than that long term, and I'll tell you a little bit about how to get a good job, but more important than that long term is once you're in that environment, how do you become successful? And I can best speak to what I've seen work at Best Buy and my previous employers that would lead to some of the behaviors that Professor Porter talked about. So, like a sports team, like the football team you'll see tomorrow, having an impact and producing results always leads to some form of recognition and the building of trust by the people that you're working with to give you more opportunity. So understand what the goals of the organization are, understand what the team is trying to do, and then how you can apply your unique skills and passions to contribute to that. We have lots of choices about how to spend our time. You have lots of choices about how to spend your time. But if you re-anchor what you're doing to be in service of our shareholders or in service of our customers, they'll provide the compass. It's not about somebody knowing that you did a great job. It is not about doing this work just because the vice president of something said the work should be done. If you are anchored to prioritizing your time and your work output to move the best interests of the company and therefore the best interests of the shareholders forward, over time that will be recognized and that will be the right thing. A lot of employees in a big company may not understand the business model enough to use the shareholder as the compass. So the customer is the simple proxy for that. What's right for the customer? This next point, we're all asked to do work. We all have opportunities to contribute. And delivering very high quality work quickly is viewed very positively. Often we produce work outputs. It could be a PowerPoint deck, it could be a financial analysis, it could be a recommendation, it could be a speech. But if you put that together and do really high quality work and do it in a relatively short and impressive time frame that gives people an opportunity to build on it faster, that is very appreciated. One of the co-presidents of the US, his tagline on all of his emails is andiamo, which in Italian, he's Italian, means let's go. So it's just a reminder of let's not overthink these things. You are probably 80% right in your blink recognition of what the right thing to do is. Support it factually, but don't subject yourself to paralysis by analysis. This is an important thing. Articulate and champion a clear, constructive point of view. Particularly in a large company, because people are subject matter experts, there'll be several people involved in an action or decision. Some are there passively. Some are just kind of watching and saying, I don't need to engage in this. This is all very interesting. And there are others that have the courage and are oriented to say, we should do this. And they have a clear point of view, and they're persistent about it, but in a constructive way. It's not about saying, she's wrong, and he's wrong, and I'm right. It's going back to our compass and what's driving us. This is the best thing to do for our shareholders. This is the best thing to do for our customers. And having the personal courage to articulate and champion that point of view. Whether it's with the teams that you work with in a school environment or in a corporate environment, creativity, energy, positivity, it just makes it funner. It makes it more fun to work with people. So the corporate environment, I think often is not that materially different in key things than a school environment. So just being a good team member is really important. Living the company values in Best Buy, I talked about what our values are and then how we use that. If someone is not showing respect, humility, and integrity, it sticks out. If someone is arrogant, if someone is criticizing unproductively the work of somebody else, it is just not accepted by the system. And in a company that values the contribution of people, culturally also they understand that not everything's going to work out, and they'll look through to the makeup of the person and the integrity of the person and judge the person, not that particular work or that particular outcome. Like I said, I was fortunate in the 2 places where I've worked to work with very rapidly growing companies that allowed me to do things, not because I was good at it, but just there was nobody else there to do it. We had nobody who had done corporate development work in China. Nobody does. But somebody's got to figure out a way to do it if the company's going to move forward. Even though you may fall on your face, you may do something wrong, but have the courage to move forward. And then what is valued in Best Buy is attracting and developing great people. When we make decisions about who should be promoted to different areas, this is a key question. Who have they brought into the company? Who have they developed? Who had a step change in performance and attitude under the leadership of this person? And why was that? Because there's only so much any of us can contribute personally. So we need to set up teams and systems that allow very talented people to contribute everything they have to give to the company and have a great life experience doing it. So this is something that is highly recognized, I think, in most good companies. So those are, Professor, okay. So questions on that?
We have time for about one more question if anyone has a question. I think they're ready to go to lunch.
Thank you guys very much. I've really enjoyed talking with you.
Thank you very much.
Thank you very much.
Thank you.